My name is Donovan Day, and I'm with Kingsgate Insurance. Today, I'd like to talk to you a little bit about the hardening insurance market. On average, about 6 to 10% of homeowners or commercial property holders might actually file a claim in any given year. And so in the next, either the last 6 months or the coming 6 to 18 months, you're probably going to be getting some insurance policy renewals, and they're going to be way out of whack on the property side. You might be seeing huge insurance premium increases and wondering, well, why is that? I didn't file any claims. And so today I want to put that into context a little bit for you. Rates are up across the board, even without claims on most lines, and it's going to take some people by surprise. The insurance market in general moves in cycles. It peaks and troughs. So you start high, get low, get high, get low. And carriers, as they make money, they cut their rates. Carriers then, as they get cheap, they end up getting too cheap and they have to increase their rates. But it's ultimately a competitive market, and carriers always kind of balance out over time. That when what's called a hard market, that changes, where there's a huge shift because of some kind of underlying change in the market. The last time we had one of those, so I've been doing this since 2010. So the last time we had one of those was 9/11. It was before I even worked in the business, where insurance rates just got way out of control, and then every carrier took a huge increase. So that last happened, back to 2001 to 04, 05, and then that kind of, again, peaked and trough, came back to reality a little bit after carriers took too much rate. Well, we're seeing that today, again, for the first time in almost 20 years, a really hard market. And so the question is, well, what's causing that? If I'm one of those 6 to 10% property policy holders and I don't file a claim, what is that? So what's really driving this hard market today is the reinsurance market. And what the reinsurance market is, and that you may or may not have ever heard that term before, is your insurance carrier buys what's called reinsurance. That's a fairly small market, but what they're doing is they're offloading their overall exposure for a catastrophic event. So, say if you're a property insurance carrier inside of Iowa, you may not want like a derecho as an example. We'll talk about that in a little bit. But the derecho was a huge event, and if you would have not had reinsurance for that event, and you were a carrier that had to take on, say, hundreds of millions of dollars in losses, you probably would have been out of business. So what carriers tend to do is they buy a reinsurance contract that says, hey, we'll take the first, $50, $100, $150 million of loss capacity, and then after that, for a single occurrence, reinsurer is going to step in and take the rest of it. And so, from what I saw in the market, talking to multiple carriers, and we represent close to 30 insurance companies, those reinsurance rates back in January of 2023 for carriers went up somewhere between 30% and 60% in premium. That's the carrier's additional rate was 30 to 60%. And on top of that, in many cases, those carriers were also doubling their retention. So where they may have had a $100 million retention before the reinsurance kicks in, it might be $150, $200 million now. And so that is a huge shift, kind of going back to what drives a hard market. That's an underlying effect that's going to affect all insurance companies. And to make that worse, reinsurance is a pretty small marketplace. The top 10 reinsurance carriers make up probably close to 70% of the reinsurance market, and in local geographies it can get even higher than that. And so that has created some carrier capacity problems. I don't know if you're watching the news headlines, you may have seen some news headlines about Florida, that insurance property market being a complete train wreck right now. It's very difficult to even get property coverage inside the state of Florida in many different situations. I just recently saw a news headline about a 300-unit condo association that couldn't even get insurance coverage from either the standard property market or the excess market, which that's unheard of. I mean, it's very, very unusual. And I mean, think about the chaos that causes in the mortgage industry and all that kind of stuff. California recently, State Farm, Allstate, and Farmers, which make up close to 30% of that homeowners market out there, completely pulled out of homeowners business out there. We're going to talk about the reasons for that in a little bit, but that's going to create a huge disruption in that market. Iowa has not been spared. We've had the similar problems here, not to that extent, but we just recently, in the last 2 months, have had 3 carriers shut down new homeowners business in the state. It could be temporary, might be permanent, no one knows at this point, but this is, again, just unheard of situations. And then ultimately, we also had carriers on the commercial side that have completely pulled out of the habitational class of business, which is your condos, your apartments, your townhomes. That's the result of those being property heavy classes of business, and carriers want to avoid heavy property exposure in the state right now. So the question becomes, why are we seeing these kind of changes right now? The first goes back to COVID and inflation. So, for a very long time, we haven't had any inflation real significant inflation in the economy. In the last 100 years, really, there was only 2 decades where you had any significant inflation. One of those being the 1940s, the other being the 70s. The 40s, of course, you were coming out of World War II. 70s, you had the energy crisis, and that's really what drove it. In both cases, the inflation happened in waves. Is it over now? Who knows? But the COVID shutdown created a supply chain issue on one side, and then the government handing out the stimulus checks created a demand problem too. So you had just massive demand problems inside the economy that drove prices up of everything. Is that over? Again, it's impossible to tell that. But the overall outcome of that to the insurance industry is that it's going to affect every line of business, because what insurance carriers do is they have actuaries that try to project future losses. And so they're doing that based on prior claims activity of that 6 to 10% that are filing claims in a given year. And so when those prior numbers no longer line up, you get way out of whack on what your future projections are, and you have to significantly change your rate in order to make up for that, because you're looking at future claims like, whoa, they're going to be a lot more expensive, so now we have to change our rates to adjust to the new reality. And just in the last few years, the current estimates on like used autos, this is affecting all lines, because like autos right now, used vehicles, it's projected that they're about 48% higher cost today than they were 1/1 of 2020. Construction costs are about 25% over the same period. Social inflation has been a huge problem too, because you have the cost with rising wages and rising expenses, and even to litigate an auto or an umbrella claim. Those are all bodily injury, property damage, jury claim. That's going to cost a lot more money. So those are all important factors to consider with inflation. Now, this is also being compounded by a really bad stretch for weather severity. So I was talking about the property chaos in Florida. That's really related to the hurricanes of the last few years that have been really rough down there, on top of the increased cost to do any kind of repairs because of inflation. California has been primarily driven by wildfires. So that's been a wildfire risk, again, and then compounded with inflation. So those 3 carriers that pulled out, that was the reason why. Iowa, going back to our low, you'd probably be more familiar with that if you're watching this video. The derecho in 2020 was the single largest loss event for pretty much every single carrier that does insurance in the state of Iowa. So you kicked off, just post-COVID with the derecho. And then 2021 and 2022, we had direct hail events impact the Des Moines Metro, which was, where a huge amount of the property exposure is in the state. And then this year, just recently in the last couple months, we had direct hail hits as large as baseball size in Grinnell, Newton, and Carroll. So you had large population centers inside the state getting slammed with very big hail events. And then, with derecho obviously was wind. So these are all leading to carriers losing money in the state of Iowa, and reinsurers, because of their exposure in places like Florida, California, they're just not tolerating any kind of weather-related risks anymore without significant underwriting changes from their carriers, the carrier you're buying your insurance from. So what does this mean for a policyholder? If you're a policyholder in the state of Iowa, what might that mean for you moving forward? So what I would expect in 2023 and 2024, and this is going to be a little bit tricky because ultimately, it depends when your policy renewed. Like as an example, my personal insurance, I renew in October. My carrier took 2 rate increases between November of last year and October of this coming year. So in this fall, when I get my renewal, my insurance will be representative of 2 rate increases inside that period, and that's going to become pretty common. Talking to a lot of carriers moving forward, I know many carriers have rate increases scheduled for 7/1 and 1/1 of 24. This is both on homeowners, personal lines, and commercial property. And so what can you do as an insured? So what I'm recommending to everybody right now is review your property renewals very closely, because carriers are changing their terms rapidly, especially on property. So if you're going to look at your renewal deck page on the property side, look at something like your deductible. It was very common just a few years ago to have what's called a per occurrence deductible. So you had one deductible. No matter what happened in any single event, that's what your deductible was. Today, it's becoming really common for carriers to put what's called a wind-hail deductible on both homeowners and commercial property, especially commercial property, and especially when you get above like a $10 million, $15, $20 million limit of insurance, because carriers are trying, again, to limit their capacity, their exposure in any one area. So when you get big property limits, you're going to be looking at bigger deductibles. But even on homeowners policies, a percentage deductible is becoming very common. What that means is if you see percent, it looks innocent, on your deck page, but when you actually look at it, what you end up finding is that on a percentage basis, you have a percent deductible of your building limit. So whether that's commercial or home, if you have a 1% wind hail deductible on a $500,000 home, you got a $5,000 wind hail deductible. On a 1% for a $10 million scheduled commercial property, that's a $100,000 deductible. So it slides with the value of the property being insured. On the renewals for property, also look at any kind of change to your valuation or conditions on your roof. So cosmetic roof exclusions are becoming extremely common on any kind of metal roofing, especially. We're even having carriers apply it to asphalt, which is something we've never seen before. In terms of the valuation, if you have an asphalt roof on a homeowner's policy, pretty common now to where if it's 15 to 20 years old, it automatically rotates to actual cash value instead of replacement cost coverage. These are all things you and your agent need to be reviewing just to make sure that the claim event, if you do have a claim in the future, your policy is going to respond as you would expect. You also want to ask your agent to review what options you might have. So, even though the general rate are going up across the board, you still have the ability to look at your policy options and say, hey, maybe I want to take a higher deductible. I'm comfortable with a higher deductible if I can offset some of that premium cost. The other thing would be, you can also look at the exposures. So whether it's a home policy, commercial property policy, on a commercial property policy, you've got a contents limit, you've got buildings there's a valuation on to determine the coverage limit of insurance. Coverage limit of insurance is not a perfect science. It's based on software estimates that, especially prior to COVID, were way off. They were probably very low based on what inflation's done the last few years. But ultimately, there is some wiggle room there. It's not a perfect science. The software that carriers use doesn't mean you can actually rebuild your structure for that. I mean, you got to find a contractor to do that. So, you want to work with your agent to develop a valuation you're comfortable with, and then ultimately that can set your limit of insurance and then your premium. So, you want to review that very closely in the coming years because it's going to be very different. So, these are just a few things that ultimately I wanted to go over. I think that there's going to be some serious changes here that have occurred, going to continue to occur. I can see this cycle going for another 12 to 24 months maybe. It really depends on what inflation does. But every policyholder, when you get your renewals, please understand that this is an individual with you specifically. This is a wider market shift. And you do have options. Talk to your agent about that. That's our goal at Kingsgate here. We want to talk to you about what options you may have, and we're happy to try and build the policy you want as long as we can manage your claim outcome. Like, hey, here's some changes we can make on your policy. It might shift your claim outcome in this way, but this also might help control cost. So that's our strategy, and we work with insurers to do that every day. And I appreciate you taking the time to view the video.